Wednesday, July 13th, 2016. Monaco 64, home of alternative economics and contrarian views. I want to move on to the UK property market or real estate. FT published a story yesterday on commercial property, and it says UK property funds start selling flagship buildings. Well, as you've probably seen from my previous videos that I've made, right after a week or 10 days after Brexit, a lot of the big funds in the UK that market commercial property funds, they had to block all their investors from making redemptions for 28 days because there was a lot of selling of these funds, and these property funds didn't have enough cash to pay their investors. I think it started out with Henderson. I'm not sure if it was Henderson, but it started out, all the major fund managers started with Standard Life, life insurance funds, and then Aviva, Henderson, and all the dominoes kind of fell. So all these big property, commercial property funds closed, the doors for their investors. And now they're actually putting the properties, the actual physical properties, for sale. And the FT says early bids indicate discounts to pre-Brexit, but not steep drops seen in 2008. So that's what they hope, the FT. And it goes on to say Henderson Global Investors plan to sell 440 Strand, that's in London, headquarters of the private bank Coutts, by the end of 2016 as suspended property funds begin offloading prime assets to provide liquidity to investors. So I think personally there's going to be, a rush to sell these things, it's going to snowball, and it's not going to be good. And the reason I've brought this up today about the UK property funds, commercial property, residential, I think that's kind of topped as well, especially the higher end in central London. And it's going to, in my opinion, it's going to spread to the, to the periphery and to the whole country. And it's not going to just be commercial property, it's going to be residential, because there's been a lot of, there's been a boom also in residential property, buy-to-let, all those kinds of schemes. And one of the reasons I brought this up is that I was watching Jay Snip 4 the other day, and he was talking about Martin Armstrong and the real estate cycle in the US. And the real estate cycle in the UK is very similar to that. And I found a story from July 9th, 2015 by Martin Armstrong. And he says the London property market is crashing. And he talks about George Osborne, who's the Chancellor of the Exchequer, of the Finance Minister of the UK, and he says in the article, British politicians have just made the same stupid mistake as the American Democrats who created the S&L crisis of the 1980s. In the US, they were greedy and changed tax status on real estate to increase taxes. They created a one-way market of all sellers. British conservatives have just done the same thing, sending shares in the housing construction industry crashing in what may prove to be a waterfall event. Chancellor of the Exchequer, George Osborne delivered the budget, and one of the big announcements was a crackdown on so-called non-doms, people who live in Britain but claim their permanent home is abroad. Osborne announced a shake-up of the tax system that would drive both wealthy foreigners out of the property market and send prices crashing, impacting the values behind mortgages. The London property boom is over, and looking at the other side of October 1st, 2015, is starting to appear like an abyss. Well, his cycle actually says 2015.75. So 0.75 at 365, that's October 1st, 3/4 of the year. And that's the same date for the U.S. Real estate turn. And it's very interesting, though, because he called, the top in April 2007, which was right. And then he said the market would crash until 2009, which he was right. And until 2012. It would crash from 07 to 12, which he was right. And then that it would rebound in 2000 until, 2015, October 2015, which it did. The UK property market here in the last 3-4 years has been rebounding. And I think he's right. He does cycles work. I'll put the links to the article on the UK property market below. And I also put Jay Snip's video about it. Even though it's about US real estate, I think it applies to the UK as well. We're on the same cycle. And Martin Armstrong argues that the housing or real estate cycle is very much connected to the economic model cycle for the whole economy in the US and in the UK as well. So very interesting. According to Martin Armstrong, this real estate correction is supposed, or downward spiral was supposed to last until 2033, and it's been a 78-year cycle. Starting in 1955, and this is it. This is the top of the cycle, 2015, October 1st, and he thinks now it's going to turn down and bottom in end of 2032, I think, just beginning of 2033. So I put the links below. Actually, I'll put Jay Snip for his video, so you can watch it. Quite interesting. So yes, it looks like UK property, commercial and residential, in my opinion, has turned. We'll have to wait and see. But Martin Armstrong has been correct about a lot of things, and he's got a huge amount of data going back thousands of years, measuring cycles, economic cycles, real estate cycles, everything. So if you enjoyed this video, please like, share, and subscribe to my channel. Take care. Bye.